All right, guys, welcome back for another video. Today's video will be pretty important. We've got the FOMC meeting coming up later today at 2:30 New York time. I think it's going to be one of the most important meetings this year, and I'll get into that later. We'll also talk about concepts like Bitcoin realized price, Bitcoin capitulation indicators, as well as aggregate net short exposure in the Bitcoin market, as well as aggregate exposure in the broader markets. And right now, I'm just showing a little trade I've got set up on Bitcoin, just trying to take advantage of some of the volatility I expect to be coming later in the day around that FOMC press conference. But I'll get into the rationale behind that later. First, I just want to go here. You can see here, you can go to the Federal Reserve website, federalreserve.gov, watch the press conference at 2:30 New York time. The data that's being released is, typically hits the market a little bit before that 2:30 New York time. But typically the Fed doesn't really surprise the market with that data release, right? They've said that before, that they don't want to surprise the market. So a lot of the surprises come, during the press conference when they talk about what they may do at the following press conference, which the next one won't be until September. So, all eyes are on the press conference, indicating what they will be doing in the September FOMC meeting. Now, of course, if they basically the market expectation for this FOMC meeting is that they'll hike interest rates by 75 basis points. You can see that this is what this graph represents. This is calculated by the Chicago Mercantile Exchange FedWatch tool. And it's basically showing you that here's the blue graph is pricing in that 75 basis point rise, basically at 100%. So basically the market has priced in that 75 basis point hike. If there are any surprises, if the Fed comes out and hikes, 50 basis points, that would be very bullish, even though they are raising interest rates. They're coming underneath expectations, which would be extremely bullish. And also, if they came over the top and hiked by 100 basis points, that would be a little bit bearish because the market really isn't pricing that in. They're pricing in the 75 basis points. Now, where it does get interesting is if you look here to the September FOMC meeting, that's what I was talking about in the press conference. So the market is not pricing in any expectation, really. I mean, they may be, but there's no consensus, right? You can see that at one point in the middle of July, there was a consensus, but later on in July, it sort of crept down. And now, so basically, the way I interpret this, and when I see this information, I look at this and I think, okay, the market is pricing in a recession right here by lowering these expectations. So maybe the market is looking at the rise in job claims, basically all the economic data that would point to a recession, and they're anticipating that the Fed will lower interest rates when presented with that data. So the market is essentially front running the Fed's forward guidance. And that's my interpretation of this decline in market expectation. So I think, I think it's fair to say that the market doesn't really have an expectation for September. So, even though the Fed has indicated that they will set a certain, raise interest rates, not nominally, either 50 basis points or 75 basis points. So I think, in the press conference today, I would be looking for any comments regarding that. If they take a dovish stance and say, we're going to end our interest rate hiking policy, then that would be extremely bullish as well. Now, I think the one thing that is probably most likely to happen that would be extremely bullish is if the Fed comes out and says, we're not providing any more forward guidance, which is something that people have talked about and people have said might happen at this FOMC meeting. And essentially what that means, what forward guidance means, is the Fed policies that, they provide, and that, when they set expectations for the market, right? When they come out and say, we're going to raise interest rates by this much at the next FOMC meeting. Well, that helps the market like manage its expectations, but it also locks the Fed into a box, and they feel like they can't react to changes in data because they have to match that forward guidance. So if you see them say that, you know, uh, they're going to, withdraw from forward guidance or not rely on that anymore, that would be extremely bullish as well, because the forward guidance is at this point is that they're going to hike indefinitely until until inflation goes down. Right, that's the current stance. So them abandoning that hawkish forward guidance would be an extremely bullish thing. They would be basically saying that they're going to abandon the interest rate hike policy without actually saying it. So that's probably the one thing I would really keep an eye out for. Now, going back to the price chart, so I had done a video where I identified this area right here as a weekly resistance, and I just if price lost this area, that it would run down below these lows right here. Looks like it has. It's kind of within that range right there. I just took a little bit of a trade there, expecting the volatility to pop up a little bit above that area. But I want to dive into some of these metrics down here. Well, first let's start with this. This is Arcane Research. It's a big research firm. Here it's listing all the different funds that have been liquidated or have liquidated, either been liquidated by the market or liquidated out of their own accord, such as Tesla. You've got Luna Foundation Guard, Tesla, Purpose BTF, ETF liquidation, 3AC, GBDC, Celsius, Wrapped BTC, 3AC Contagion, Public BTC Miners. So if you guys are active in the Bitcoin space, you guys have heard of all these things, right? The different funds blowing up, kind of initiated by the Luna Foundation Guard, right? This is a huge amount, right? Keep in mind that the largest Bitcoin whale currently, outside of exchanges, holds 133,000 Bitcoin. So 80,000 is pretty much close to the largest whale in the space, liquidating all their coins all at once with extreme conviction, and then causing this cascade effect that liquidates all these different funds. And that you can see that here. So you can see the capitulation here. This is realized loss, meaning coins that are not necessarily held at a loss, but actually sold at a loss, right? And you can see it peaking during the COVID crash, but during this liquidation, really around the Celsius liquidation down here, you can see how those the capitulation peaked above March 2020. Again, that's realized losses. So, a lot of people will argue, well, we haven't seen true capitulation yet. They'll say we need another leg down to really just wash everybody out. And, it is possible that you get another leg down and even greater realized losses. But, you have to characterize this as capitulation because it is realized losses. A lot of people would characterize the COVID crash as capitulation, right? A lot of people capitulated during that time. And if you were trading the market during that time period, just how anxiety inducing it was. Personally, I got sent home from work the day that Bitcoin was doing its minus 50% in a few hours. So that I remember how that felt at the time, and it did feel terrible. It did feel like, things were seriously changing in the market, right? Like this time is different. And now, we're at a similar phase in the market. So, of course, capitulation is always easy to identify in hindsight. And, but if you just describe it as realized losses, you can say, okay, we're in this phase of the market, whether, without necessarily needing to call the absolute bottom in the market. You just kind of realize, okay, maybe we're getting close to a bottom in the market. And you can see that here. So, of course, just the way the market works, right? You can see Arcane Research also published this where you get your net short exposure. So, of course, it's just the way the market works, right? If this is a bottom, then you're seeing, short exposure just peak. Um, Again, it's just the way the market works, right? And people can't get on the right side of the market. Again, maybe the market goes lower and these guys are right, but with everything else we're seeing in the market, maybe it's not the best time to have huge short exposure. And considering that we've got FOMC today and you've got this major short exposure, that's kind of why I've taken the other side of the trade and gotten into a little bit of a long position, just kind of anticipating that squeeze, a short squeeze. Because when you have these type of like an FOMC meeting, right, liquidity is drying up in the market, and this data release is going to come in, and the market's going to open the door. And if you've got a lot of shorts just hanging out, thinking they're safe, well, they're probably going to get squeezed by that volatility and that low liquidity, even if the market ultimately takes a leg lower. We saw that in April, right? There was an FOMC meeting around that time, and then Bitcoin, it was a pretty bearish FOMC meeting, and Bitcoin rallied from like 33,000 all the way to 48,000 before dumping down. So I would be careful to interpret a short squeeze as anything fundamental or, anything long lasting. Really, a short squeeze is just a short squeeze. It's not a trend. It's not anything other than shorts getting wrecked. But it is something to keep an eye out for. And sort of my base case for why a short squeeze may not necessarily be the bottom, right? And you wouldn't want to FOMO into it, is this chart right here, and this shows Bitcoin's realized price and the days that Bitcoin has spent below realized price. So essentially, what realized price means is just it's representing the average cost basis of all the coins in the market. So if you have, basically what it's showing is that out of all the coins in the market, what was the average price they were purchased at divided by the amount of coins in circulation. So basically you get an idea for the average cost basis that exists in the market. And typically that area provides bottoms, right? Really, at least in modern times, right? It got a little bit below it right here just because Bitcoin was, this nascent thing that only been around for a few years. But as it got a little bit more mature, those realized prices were not necessarily pico bottoms, but they did serve as bottoming areas for Bitcoin. And you see that. Now, what's important is that, Bitcoin can spend a considerable amount of time there, right? So, like for right here, like if you get, shorts piling in here, you could get a squeeze, right? Like we saw in the net short exposure for Arcane Research. But, you don't necessarily want to FOMO into the top of that short squeeze, right? Because you could just get a squeeze and then price retest the lows, essentially. And that's a very, very realistic scenario. So just something to keep in mind. Bitcoin has historically spent a considerable amount of time. It didn't do that in March 2020, but, this was a little bit different, right? You had an impulsive move into there, and then you had the Fed coming out and promising unlimited financial support, that they have unlimited money, basically. So, of course, you see a V-shaped recovery. But, typically without that, the Fed stepping in, doing quantitative easing, typically Bitcoin spends a lot of time at this area, where not only is it gone to the downside dramatically, but it spends a lot of time there going sideways, which just breaks the spirit of the bulls. So, again, it's just one possible scenario, but probably the scenario that would, frustrate the most people and, drain the most energy out of the space. So conversely, probably also the one scenario that a lot of people aren't expecting, right? People kind of don't really bet on sideways price for a considerable amount of time. And just going to this chart right here, this kind of shows what we were seeing in the Arcane Research, where you had, Bitcoin short exposure, hitting pretty high at, the current level we're at. And this is just the, showing the U.S. equities market. So you can see here that, risk appetite is just extremely low, right? It's even lower than it was following the great financial crisis when everybody thought the world was ending. And here as well, it's actually showing you their like major asset managers, major fund managers, their equity allocation versus cash. And then, again, this is from Bank of America Global Research, so this is not some like you know fringe research. This is Bank of America, and it's showing, like you've got very, very low equity allocation versus cash, meaning investors and asset managers are sitting in cash right now, you know, probably waiting for some type of signal to get into equities, which makes sense considering the economic uncertainty that exists. But it does also show you that you know it is a little bit of a crowded trade, right? And there's a lot of short exposure in the market, but not just short exposure. There's also a lot of sideline capital waiting to step in. And that really contributes to a short squeeze if you do get some type of signal that takes that sideline capital off the market. So just something to keep aware of. These people, they're in cash because of their economic analysis, and this is a good example of how your economic analysis can be right, but if you're right with everybody else at the same time, then you're ultimately wrong because you wind up in a crowded trade, right? So if everybody's looking at the economic data and seeing how terrible it is, and they're all already have equities and in cash, then their analysis is all correct, but um, there's no sellers left in the market, right? And so it's a situation where the market can run the other way, contrary to economic data. And I wouldn't necessarily take that as like a generational bottom, right? Because typically when the market does reverse and create new all-time highs, there is some fundamental shift. But I guess what I'm just trying to say is that in bear markets you can have incredibly violent rallies, and they don't mean anything fundamentally, right? I mean, they can still have face-ripping rallies, set in a lower high, and then create lower lows. So it's just something to keep aware of if you are managing risk. So moving back to the price chart. Yeah, so previously, I had marked off this weekly high right here based on actually this one right there, based on RSI EMA trade. And I was saying that, if price lost this area, it would probably trade down to this level. We saw that just knifed below there. I actually didn't get that trade right there, but I did enter long when, price reclaimed this level here and then came down. Got a 618 retracement right there. And ultimately what I'm looking for is for, to be on the other side of the, everybody who is net short in Arcane, right? Or by Arcane Research showing these net short positions. I want to take the other side of that trade and, look for a volatility push upward. Again, it's, if you do have a short squeeze, you could whipsaw around, or you could push even considerably higher. But I think, there is a pretty good chance of some short covering coming later in the day, unless the Fed comes out with, things that are even more bearish than the expectations that exist in the market, in which case that's why I have the sell stop right here. So it's just, a very short time frame trade, a little bit cavalier to trade on a day like this, but, if you see an opportunity, why not take advantage of it? Ultimately, I would be looking for the weekly to close above this level right here, preferably 21,666. That's kind of my line in the sand based on that previous weekly trade idea I circulated. So if I see a weekly close above 21,666, I'm going to generally be bullish, looking for 20K to be a bottom and rally up. And on the flip side, if 21,666 is not held on a weekly basis, if we close below this level on the weekly, in that case, I wouldn't be taking long positions, not necessarily getting bearish, but just trade ideas invalidated. So there's nothing to do. anyway, just my opinions. I hope you guys like this video. Please make sure to subscribe to the channel and leave a like on the video, and I'll catch you guys in the next